Hello, everyone. I hope you're all well. Welcome to the API Chronicles from Marqeta, Unlocking the Future, a live celebration of APIs. So today we are exploring Buy Now, Pay Later for Business, or B2B BNPL, if you fancy trying to pronounce that. Unless you've been living under a rock, you'll know BNPL is incredibly popular in the UK and Europe, growing in popularity as a form of consumer credit. With customers attracted by that simplicity of the paying back, the flexibility to buy what they want before they have the money to do so. Hasn't been without its challenges. We've all heard the critics saying it encourages consumers to spend beyond their means, while BNPL providers argue that it's clearer than credit cards. And we're also awaiting regulation in that area, so lots going on. But one thing that hasn't been talked about as much is how BNPL can be used for businesses. So it can go far beyond just buying some new clothing or electronics, and it actually has the potential to really change age-old sectors like trade credit or invoice financing, for example. And this can be particularly important for smaller businesses. So according to Marqeta's research, half of European SMEs have between 10,000 and £75,000 tied up in their outstanding invoices every month, or between 5% and 20% of their overall revenue is owed to them on average at any time. So cash flow is clearly a concern. We all know that. And it doesn't matter what market, industry sector, or business size you are. With B2B BNPL predicted to be a $700 billion industry, how can companies like the ones here today, De facto, Mondu, and Tu, offer business solutions to secure a slice of that pie, help the SMEs smooth their cash flow, innovate and grow, and just concentrate on what they do best? So my name's Olivia Minnock. I'm Senior Partnerships Manager at embedded finance company MMOB, which brings products like credit to businesses and consumers wherever they are at their point of need. And I'm delighted to be joined by Jordan there from De facto, Malta, who's co-founder and co-CEO of Mondu, and Edward, who is co-founder of Tu, or Ed. So I'll be asking the questions. Hopefully this is the most you will hear from me for the entire live stream. But please do send in your own questions in the comments, and we'll try and get through as many of those as we have. I'll kick off by just asking the panel to introduce themselves and how they ended up in this sector. So Jordan, just because you're at the top, I'm going to pick on you first. Do you want to tell us a bit about yourself and how you ended up in B2B BNPL?
Sure. Thank you very much, Olivia, for the introduction, and really happy to be speaking about B2B BNPL with you guys. So thank you very much again for the opportunity. So my name is Jordan. I'm a Paris-based French engineer. I've worked only in startups in the past, and before De facto, I was co-founder and head of product at Spendesk, with a spend management solution for SMBs based in France, but with a footprint in Europe. And basically, while my co-founders and I were working at Spendesk, we've been in touch with hundreds of SMEs all across Europe, CFOs, CEOs, accountants, part-time CFOs, external accountant, etc. And so we would help these guys better manage their purchases on a daily basis. But at the end of the day, they would all share the same need, i.e. Easier and quicker access to financing when it comes to making those purchases. And so that's why we decided to build and launch De facto, which is based in Paris, but with the footprint in the Euro area, with the mission to basically power SME growth with instant and fair access to financing.
Great. That's a very, very important goal. And we can tell you're Paris-based. You've got a lovely background there as well that we initially thought was fake. So it looks lovely. Malta, how about you? Can you tell us a little bit about, how you got into the BNPL space and what that looks like for Mondu?
Yeah, absolutely. So hi, everyone. Very big pleasure to be here. I'm Malte Hofmann. I'm co-founder and co-CEO at Mondu. I've been an entrepreneur in tech and e-commerce for the last 13 years. Before Mondu, I co-founded two fashion and lifestyle e-commerce companies and co-led them to success. One was My Brands out of Berlin, which is now part of Zalando, as we sold it back in 2010. And Dafiti, which became the market leader in fashion and lifestyle e-commerce in South America, with operations in Brazil, Argentina, Chile, and Colombia. And that company IPO'd via the Global Fashion Group on the Frankfurt Stock Exchange in 2019. So I was a merchant myself for many years, and I believe that I understand the issues that merchants face, whether they sell B2C or B2B. And for Mondu, I've actually switched sides to help merchants to unleash their potential via better payment solutions. And I really believe that there's still a lot to do in B2B payments. And and that is what our company Mondo also stands for. Driving innovation in the B2B payment space through better technology to ultimately bring B2B payments up to par with B2C. And since B2B transactions are inherently linked to credit, we chose B2B Buy Now Pay Later as a wedge into that broader B2B payments market.
Absolutely, that makes a lot of sense. And finally, Ed, how about yourself? How did you end up where you are today, and how does TWO fit into all of this?
So like the other speakers on the call, I came to this from a technology background. In my case, I was in Silicon Valley working for a large data company called Palantir. Before that, I was in the Army. But really, the genesis of TWO, for that, I do need to hand over to the credit to my co-founder, Andreas, who launched a B2C marketplace in Latin America. It was really present across all of Spanish-speaking Latin America, very broadly comparable to Amazon, but he had a large subset of his buyers were actually business buyers, B2B, trying to purchase for their day-to-day activities on his platform and failing very often to do so for all the reasons that we're going to go to in this talk later. But when he sold that company and came back to Norway, he launched a consulting project with a large sporting goods company that had also just launched a B2B platform and was experiencing exactly the same challenges that he was finding back in Mexico. And when you have a problem in Mexico and in Norway, effectively two diametrically opposed ends of the economy, you really do have a problem everywhere. And that was the guiding thesis, and in fact, has proven to be the case.
Absolutely, and I think that's as we said in the intro. It doesn't matter what industry or market you're in. For a small business, cash flow is always going to be a problem, and you're always going to need support with that. So, welcome all of you. Thank you so much for joining the panel. I guess the first thing I would love to know, and we'll have a show of hands, is who has actually used a Buy Now Pay Later product as a consumer, or have you kind of looked into that at all? So. Excellent. I'll pick on you, Ed. Your hand was straight up there. We don't necessarily need to know what it was for, whether it was a phone or a pair of slippers, but what I would like to know is, what was it about that experience that worked and that you think, business customers should also enjoy?
It's really straightforward. There is, of course, a value proposition in B2C BNPL, which is, for that last ounce of credit that you can possibly squeeze out of a lender, this can often be the final source. And that's perhaps one of the more unsavory aspects, or a source of one of the more unsavory aspects of B2C Buy Now Pay Later. But on the other side, there's a very simple technological reason why BNPL is so appealing. And that's it. That little pink button is the one that you just click and you're done. There's nothing else to do. There's no even CVV that you need to add. And it's just so convenient in that respect that even if you don't strictly need to split up your payments into multiple stages, and my most recent purchase was for a bicycle helmet that costs, £80 or something. Really, no strict need for the credit, but an absolute desire to end that transaction there and then by clicking a button. And that was the attraction, in fact, of that particular purchase for me.
Absolutely. And Jordan and Malte, do you agree with that? Was there anything else about the experience you wanted to bring to the B2B side?
Yeah, I think I agree with Ed. There are two elements to it. There's a credit element, and there's obviously the convenience element. And I think when I said, we want to bring B2B payments up to par with B2C payments, we really want to, bring that consumer experience. We always say, B2C payments, they're so frictionless, seamless, and almost joyful for consumers now. That's the kind of experience that we want to bring to B2B payments as well. And obviously, there are some underlying hard things that you need to solve for in order to actually bring that convenience to customers. Whether it's the underwriting process that needs to be obviously real time in the online checkout, or whether it's other elements like having different settlement methods that actually make sense and are easy to serve for customers as well. So I think there are a lot of elements that you need to solve for, but what is in the front end, that's the convenience element and drives the value proposition for the merchant and ultimately customer experience.
Absolutely. Jordan, do you have anything to add on to that, or does that pretty much cover it for you?
No, I agree with what has been said. And as Ed, on my side, I bought a bicycle with the B2C BNPL experience. That's because I got mine stolen like 4 times within in 1 year. it's the joy of Paris. But I would like to emphasize a bunch of differences though in between like B2C and B2B BNPL. I guess from our understanding at De facto is that when you offer BNPL to consumers, basically the buyer and the treasurer, i.e. the person in charge of the funds, is the same person. And so it makes a lot of sense for, I would say, like an e-commerce consumer to make that kind of decision, like, okay, I'm going to pay in installment, I'm going to pay later, etc. for this purchase, because you own the funds and you basically own your treasury. And in B2B it's a bit different, and especially for I would say so it's different for small businesses. It's almost the same for very, very small companies, like where you only have like 1 to 2 ETP, but for larger businesses, even like starting 10 employees, the buyer may be someone in your team, someone from your marketing team, someone from your purchase department, etc. And it's usually not the CFO. So you also want to I would say incorporate that kind of specificities, that you have basically 2 different personas when it comes to making a credit decisions. But I agree that the fundamentals are quite the same, in a sense that we as individual, we are looking for experiences in our private and in our professional lives where we value like convenience, ease, and instant basically experiences. And that's, I guess, what we are currently building at this table.
I think that's a really interesting point, and I would love to hear the other panelists' thoughts on how offering BNPL can be easier for a business when there might be a particular person trying to make a purchase who, if they were to take out a credit card or a larger loan, they would have to get those approvals from elsewhere, from up above, as you've said, Jordan. Ed and Malte, what do you think about that? Have you seen that making life easier for teams?
Yeah, for sure. There are in fact 3 entities in any transaction. There's the person who's driving it, the agent who's making that purchase. There's their boss, or the ultimate business owner, who might be the one who has to give the green light or not. And that could, of course, be the same person. And then there's this third entity, this entity that doesn't exist in B2C land. That's the legal entity, the company that's actually making the purchase. Tying those 3 together is the key element here in successfully implementing a B2B payment method, whether it's through one of our offerings or doing it yourself. And it's a key difference, as Jordan outlined, between us or B2B, I should say, and the B2C alternatives.
Mm-hmm, definitely. And Malte, I'd like to ask you, what kind of key customers do you see? So you mentioned the background in e-commerce, and there was a clear need for that kind of flexible financing. But where are some of your customers coming from? Why does BNPL appeal to different groups of SMEs?
Yeah, I think you can obviously look at the different segments in different way, or cut them in different ways, right? I would say you can think about it by industry, right? By the problem that you're solving for them, and also the business model of your customers, right? And I think if you look at by industry, for example, and I look at our customer base, we can see that we have customers really from the most diverse industries, right? Whether it's fashion and decoration, construction materials, food and beverage, electronics, auto parts, you name it. Obviously, we are in the business of enabling merchants to offer their customers the favorite payment methods on the one hand, but also flexible payment terms, whether it's through net terms or installments. And this use case, if you will, resonates really well with merchants in very different verticals, right? And it's really a horizontal use case that works quite nicely. I think if you look at sort of the areas of the segments by maybe the use case, we started out because we had a strong hypothesis that B2B e-commerce would be this core vertical in the beginning, or the core element. But what we saw is that B2B transactions, they're not as digitized yet. Yeah, so there are a lot of products that still require, some sort of consulting, by a sales representative or something of that kind. And therefore, sales channels like telesales, field sales, or even sales on trade fairs, they seem to be really important. And so it was clear for us very quickly that we would need, to also support these use cases. And we see there's a lot of room for growth. And basically, we built this multi-channel solution now where we can support, obviously, transactions, online checkouts to support the B2B e-commerce cases, but also other channels for our customers, our merchants. And then I think the last point, also by business model, right? We see that a very interesting segment coming up, obviously, with the B2B marketplaces. B2B marketplaces are obviously platforms that connect buyers with sellers. The different types of marketplaces, right? Ones that are transactional, some are SaaS-based, some are, inquiry-based, basket-based, and not all of them are owning transactions yet. But that's changing. More and more marketplaces, from our point of view, are now, looking to also offer payment on their platforms to, own that experience as well. And this is also, a very nice field of growth and a lot of potential for us that we see.
Absolutely. And Jordan, what about yourself? Where do you see your customers coming from? What would the profile of the customer be?
So first of all, if we take a step back, basically, what B2B BNPL is solving for customers, it's basically working capital. Why is that? It's because in France and more globally in Europe, SMEs are kind of suffering from delays of payment from their large counterparts. So in France, I guess the typical average payment from big corporates, it's 73 days, which means that an SMB has to suffer working capital for 73 days before they can get the money from their customer. And so if you want to ease that kind of working capital issues which SMEs are suffering, you have two ways to solve that. Either you allow your customers to kind of cash in their receivables earlier, and that's I would say the more classic factoring solution, but we're also offering solutions on that side. Or you allow your customers to basically pay later for their suppliers, and that's where I would say B2B BNPL plays. And then when it comes to allowing your customers to pay later, you have two options you have multiple options to do so in terms of user experience. It's when do you want to offer basically these financing options? It's either on checkout, and that's what we've been discussing so far. We basically, so that touches online transactions, and that's to be compared with, I would say, more B2C BNPL. Or you can offer financing solutions to pay later once the transaction is already made. So, for example, at De facto, we are working with, I would say, neobank, financial SaaS, financial platforms like Penny Lane and Libéo in France, who are basically account receivable and account payable management solution. And so directly from your account payable solution, like it's the place where you import your suppliers, import your contract, schedule your payments, etc., you can get additional payment terms. And so basically the different, I would say, type of companies that we are ultimately serving are companies that have structural working capital needs. So for example, you have everything in the transport and logistic industries, in the construction industries. We have a lot of digital agencies, production agencies, creative agencies, etc. And also we are working with SMEs who have a lot of payables, restaurants, for example, and we managed to basically offer these, I would say, financial ease directly from the softwares that they are already using to manage their payments or manage their receivables.
Absolutely.
Olivia, there was a really interesting question that just came up from one of the listeners. Do you mind if I take it?
Yeah, I would love to take
perfect.
That one.
So it's fascinating because I wasn't actually aware of the £700 consumer sort of threshold for B2C buy now, pay later. But unsurprisingly, actually, that's the threshold where we see conversion, share of wallet really increase. If it's a small transaction, and we have no lower or upper limits. The largest transaction we've taken so far is 1.5 million euros in a click. And I'm sure that record's going to be broken even in the next few weeks, and right down to just a few pennies. But there's a reason why BNPL really kicks in hard around the £700 mark. And that's where it starts to get uncomfortable to use a credit card or a debit card, which is still, frankly, the default go-to method for many buyers, even if, in fact, it means that they're often calling on using their own personal finances, their own personal credit card or debit card to transact on behalf of the business. So that was a really interesting statistic that came up there.
Yeah, absolutely. And on that note, Jordan and Malta, do you have any kind of average values you're seeing, or what do you think about that?
Well, I agree with what Ed said. So obviously, in general, average order values in B2B, buy now, pay later, or in B2B in general, are higher than in B2C. I was actually surprised, just like Ed, with the £700 figure. I had an average more of the 150 to 200 on the B2C side in mind. But it's exactly right? So in B2B, baskets are higher on the one hand, and you have just like Ed mentioned, we have, for example, customers that that facilitate purchases of used farming machines. So tractors of 550,000 to 100,000 are sort of the normality or the normality. And on the one hand, average order values, but also typically in B2B, what we see is higher order frequency, right? Because you have replenishment processes and all of that sort, and that all adds up to the necessity for much higher buyer limits. Yeah, and so a good buy now pay later solution needs to support high buyer limits, because that's just the reality in B2B.
Absolutely. I think, Ed, something I wanted to ask you about was the kind of world of, I guess, trade credit and how it's changing at the moment. So much like buy now, pay later on the consumer side wasn't really a big new idea. People have been paying for things in installments for a long time. We've also been having small businesses offer other businesses trade credit, and often it was somebody who was trusted and they knew and was a regular customer. So how is that all being disrupted by the idea of buy now, pay later?
So the reality is that globally, only 2% of all B2B transactions, irrespective of whether on or offline, happens via card. Just 2%, 1 in 50. The rest are happening functionally by invoice. Now, when you move to the online space, until the advent of companies like Two, there really wasn't any B2B specific payment method and so it was card or credit card. Now, even corporate credit card penetration is extremely low. In the UK, it's something like 13% of businesses have a corporate credit card. And you can be sure that the modal count is probably 1, which is to say there's one credit card for the vast majority of those businesses. And that's very tightly locked up in the director's pocket, and probably rightly so. A real challenge, by the way, for our merchants, because 3DS becomes the authentication phase of a card checkout becomes a real problem. Because if you're checking out with the company card, but it's not got your name on it, then when you get pushed to authentication and that push notification comes to the boss's phone, they take one look at it and go, no, they don't know what's going on there. It's their money, but it's not them driving the transaction. And we have merchants that are seeing fully 30% of their transactions fail after the checkout. Highly motivated buyer who's got all the way through the checkout and has hit click, has borrowed the boss's card, and is now finding they can't complete the transaction, and it's the merchant who suffers most there. And so offering a payment method that divorces the requirement of splits the requirement of the buyer to actually be in some way in possession of a named credit instrument or a card is a huge benefit to our merchants. And fundamentally, the day that trade credit became BNPLs is the day that B2B commerce moved online. What we're offering is fundamentally, like at its core, is trade credit. It's no different from one of the oldest credit instruments in human history. Some of the first loans ever made were effectively the same loans that we're all making daily, in thousands of times on behalf of our merchants. But the ability to make that transaction work in an online context requires really replicating all or relearning all the lessons that B2C e-commerce merchants have learned over the last 30 years, which is that clicks cost conversion, keystrokes cost conversion, page loads, page redirects, and God forbid, asking for example, uploading documents or even physical, like presenting yourself physically to present your bona fides, hand over a passport in order to be approved for trade credit, just won't fly in e-commerce land. No more in B2B than in B2C. So that's really the fundamental difference, is that being able to allow a buyer to check out in a click, irrespective of who they happen to be, as long as they're a valid member of the company and the company has credit, is revolutionary. And that's why you've seen such a low penetration of e-commerce in B2B land. And whereas B2B transactions globally dwarf B2C, they're multiples the size of B2C. That relationship is inverted when you go online. And it's just been a lack of an available payment method that's held that back. So we're now seeing merchants really invest in, B2B merchants really invest in selling online now.
Absolutely. And if anyone sees me ever traveling on first class, they'll know that I've just slipped through on the company card and managed to get that done. Maybe BNPL will help with that too. Jordan and Malte, what do you think about that? You know, what are the kind of changes that you see happening to the traditional methods of trade credit, particularly, I guess, when an SME may not know their customer, or they may not have those kind of bespoke relationships with each customer that they used to have when things were offline?
Well, I guess the use case that Ed is describing is exactly why we decided to launch Spendesk like a few years ago, is to kind of distribute better access to credit cards within the company, so that the 3DS etc. don't fail. So I agree with the fact that basically when it comes to a company, because the buyer is different from the business owner in most cases, then you have some like additional security stuff to have in mind. And so when it comes to trends, I guess really the thing that we strongly believe at De facto is the fact that now we want like instant experiences. And so when you decompose, I would say, a trade credit, you basically have a few steps to consider. There's one, like gathering the user need, like what is the purchase, like how much do I need and for what. There is second, I would say, the onboarding of your user, because ultimately you're going to lend some money to someone, and so you need to be able to get in touch with that people without asking too much of a burden, like a passport in real life, etc. Then there is all about underwriting. How do you, as a lending business, as a B2B BNPL provider, make the best, I would say, credit decision that ultimately are going to, I would say, not convert into too much default. And lastly, there is all about, I would say, payment methods and kind of orchestrating, sending the money to the merchant, to the seller, etc. And all of this has to happen in seconds. And I would say one of the biggest challenges that we see at De facto is all about underwriting. I think that compared to B2C, B2B BNPL underwriting is less about detecting some like fraudulent behavior, like some people, making purchase with stolen cards, etc. But it's much more, I would say, credit risk assessment. And in that context, it's a huge, I would say, challenge that we have to make the best underwriting decisions based on some credit scoring that has to happen in seconds. And I think this is, I would say, like super interesting to work on, and the end value for the customer, which is basically getting the loan in seconds, compared to getting a loan in a few months when you have to go and meet your bank. This is where the core value prop lies.
Absolutely. And I'm guessing, as you say, once a business customer is onboarded in that process, they can access things really quickly. But does anyone on the panel want to talk a little bit about the risk profile there and how you are actually onboarding your partners onto this BNPL offering? can see Ed unmuting.
Sure, I can take that. I mean, there are two risk profiles here. There's the risk profile of the merchant themselves, and then of course of the buyer. Really, it's the buyer that's the key one here in this transaction. Now, when it comes to underwriting, classic errors that merchants make when they do this themselves is they rely on bureau data, for example. Now, there's nothing wrong. We also use bureau data. I'm very clear about that. It's not by no means the only source we're using, but it is a significant one. Now, a key error that the merchants are making there is that the probability of default that is offered by the bureaus is on a 12-month timeline. And we're not talking about a 12-month loan here. We're talking about a 1 month or 2 or 3 month loan, perhaps, typically. Now, if you, at the margin, by relying on bureau data exclusively and the bureau's assessment of the probability of default, what you're doing at the margin is you are declining buyers who should be accepted because they might be a risk over a longer time frame, but you're only lending for 30 days. And you're missing out on those transactions. And we see that our approval rates, for example, significantly higher than any merchant that we come across typically is willing to offer, especially when it comes to the long tail. And what I mean by that is those merchants for whom they have thousands or even tens of thousands of prospective buyers. Take a classic example like office supplies. Anyone that has an office is fair game for an office supply company, and that could be not just legal entities like limited companies, but also government agencies, charities, and so on. Now, if you have to underwrite the credit for all of these as they come in, and the transaction values are fairly low potentially, and let's say that the repeat purchasing behavior is fairly low too, you're only buying, I don't know, a stapler once a year, for example, then it becomes an enormous expense for the merchants to underwrite that credit because they do it themselves. They have to maintain their own credit teams. And of course, we haven't gone on to the accounts receivables challenge, the challenge of chasing down unpaid and late bills or invoices. But like I say, if you're underwriting the credit for infrequent transactions from a very, very, very long tail, potentially, of buyers, you are setting yourself up for a real headache. And that's something you should absolutely, as a merchant, be looking to offload onto an expert, whoever that person might, or whatever that entity might be. It's a huge, huge, huge challenge to undertake that yourself. Challenge has been for the merchants is that options just haven't existed, especially if you're selling online. It's just, who are you going to pass it off to? And it ends up being essentially the same challenge that my co-founder faced in Latin America. It becomes an Excel spreadsheet, some Google searches, a quick bureau check, and a wing and a prayer. And that works until it doesn't work. And when it doesn't work, it fails spectacularly. And losses very painful to bear when you're talking about potentially large invoices that go unpaid.
Absolutely.
And maybe just to that, if you, for example, I mean, this is what the research shows. If you ask, for example, 100 companies in Germany, how would you like to pay for in the internet? 95 will say, on invoice with net terms. And at the same time, only 45% of e-commerce web shops offer that particular payment method, on invoice with payment terms throughout the entire customer base, right? And the question is why, right? Because it seems obvious, if I were to offer to more people, my conversion rate potentially increase, and I would drive more business, right? And this is really, what then Ed and Jordan and I just described. It's really complex to actually offer, payment terms days, net terms at scale, because of the underwriting piece, to a certain extent. And in B2B, you have all these complexities around, being able to underwrite the different legal entities, right? What Ed said, legal entities range from, real structure companies that are public companies to limited liability companies, down to freelancers and sole traders, etc. And the other important element are new customers, right? And this is the biggest difference, I would say, when, a merchant offers credit on their own. They typically do offer some sort of credit, or may offer some sort of credit, but typically only to the customers that they know really well. Those are existing customers that have a payment history with them. But being able to underwrite also customers at scale that they don't know, right? So especially new customers, that's the biggest challenge, and that's when they typically have to or should rely to companies like ours to really drive their business for them. So this is also then obviously the conversations that we have. Will you work with your own solution, or will you work with us? Where this is typically our convincing argument that eventually they will drive more business working with us.
Absolutely. And I suppose, when you think about those risks of people paying late and things like that, do you all have any examples of where offering a BNPL style solution just makes it, simpler for companies to know how much they're going to have to pay back and when, and also perhaps how you use that data to ensure that those payments are on time? Have you seen evidence of it kind of making the process run smoother? I guess I'll put that out to everyone.
Absolutely. It's a game changer for most merchants to just offload this extremely tedious and extremely uncomfortable relationship onto a third party. The reality is that the vast majority of merchants should not be acting as a bank for their buyers, but they have no choice. If 98% of transactions are happening via means other than card, what that really means is that 98% of transactions are being funded by a merchant in order to allow their buyers to complete a transaction. And it's a huge challenge where the repeat nature of B2B transactions is another challenge, right? If you are only ever going to see this buyer once in your life, you can afford to be perhaps a little bit harsh. But if this is a buyer for whom 10, 15% of your entire revenue it relies upon, and you have to call them up to remind them that they're late on a payment, you are setting yourself up for a very uncomfortable conversation. And that's where 30 days really becomes 96 days, which is a huge challenge for merchants, again, because that's 96 days without inventory and then without the associated working capital. And so, yeah, absolutely. A major value proposition that CFOs see in a product like ours is that they no longer have to undertake those functions themselves. They can offload those to an outfit that is specialist in this. It's far more efficient for them to do so.
It would be really good to be able to measure how much money is lost or delayed by people just feeling sheer awkwardness about actually having to pick up that phone and have the conversation. So I can see how having that system in place would really, really help there. I wanted at this point to maybe zoom out and just look at the general challenges that SMEs are facing at the moment, across the UK and Europe. When it comes to accessing lending products, it's never been easy, but certainly there's a lot of pressure on them now, more than ever in the current economic climate. So, Malte, maybe I'll come to you first for that one. What are the challenges that SMEs are facing in accessing lending at the moment, and what do you think is the answer there?
So I think obviously it has become more challenging recently to access funding. I think businesses are already struggling with higher costs due to inflation and obviously lower economic activity as well. And now they're also facing a more restricted lending environment as traditional lenders like banks reduce lending and also as interest rates increase. We also see that some of the government Corona helps or COVID help packages across Europe, they're running out. And that just exacerbates the situation. So this leads obviously to a general funding gap, and in turn calls from our point of view for alternative forms of lending, right? To eventually reduce that. And we believe that embedded finance, for example, directly in the point of sale through Buy Now Pay Later can contribute to closing that gap. I lived in South America for more than 10 years. We had operations with Dafiti in Brazil, Argentina, Chile, and Colombia. And two countries of those, Argentina and Brazil, they are countries with very high inflation rate and very high interest rates. When we first started in Argentina in 2011, inflation was at 20%, and it went up to 80% hyperinflation. And what we saw was that the demand for short-term financing from the participants of our marketplace really only grew over time, right? And we served this demand through our embedded financing solutions. So I think embedded finance can definitely play an important role in closing that gap.
Absolutely. Jordan, I'd love to get your thoughts on that as well. But obviously SMEs need more choice and more access to lending, but do you also have to be more careful about working with these kind of businesses?
I mean, yeah. Today's environment is about basically higher interest rates. So when it comes to borrowing some money from an SMB standpoint, it's more expensive. Second, banks or I would say traditional credit institutions are getting more. Yeah. I saw that question. I will try to answer right after. They are more careful when it comes to lending money to businesses, and that's meant to be. Right, it's the European Central Bank wants banks to basically slow down the credit so that the economy can, I would say, slow down a bit to reduce the inflation. So I don't believe that our role as B2B B2B BNPL players is just like flood the economy with easy credit. That being said, I think that our role is to provide like a great alternative that is super easy to use. And something that we really want to insist on at De facto is that it's complex to get a loan from a bank, from an administrative standpoint to a paperwork standpoint, etc. And it's super slow. It can take like 3 to 5 months at best when your advisor is not in holidays. And so basically we want to make it super simple and super fast for SMBs to basically get the right amount of cash, I would say the relevant amount of lending based on their like future activities, but making it as easy as possible, and that's really I think I would say the area of focus. And last point, just like Matt said, we strongly believe that basically the embedded finance and more specifically the embedded lending, I would say, trend is going to completely shift the user experience, where as a consumer or as a business, you don't need to physically or digitally go to a credit institution to get some credit, but you can access it directly from, I would say, your preferred platforms. It can be an e-commerce website where you have your recurring purchases, or it can be your account payable or account receivable or your favorite marketplace where you already are spending most of your time making purchases or managing your business. And for us, this is really where it makes the most sense to offer this, I would say, ease and quick access to financing. And if I try to answer a Noor question very quickly, so just reading it right now.
So you've got the 3 focus areas. So which has been the challenging area for you, and which has grown the fastest?
So today we started by B2B receivables, and that's today I would say 70% of our volumes. And in 2023 we believe that we are going to be like 50% with the payables financing. So I guess that we more have like 2 focus areas. You can finance the payables, and that's the B2B BNPL, I would say, side, or the receivables. We historically started by receivables because you have, I would say, a proof of future revenue from your potential borrower, and we've been moving fast on the payable side, especially with some integrations with, I would say, a payable management solution.
Excellent. I thought of a kind of slightly different question there around, I'm still thinking about the shock we all had at Jazz's question where the average consumer, I suppose, basket size is £700. I thought that was super high. I would love to know, in the B2B sector, is buy now, pay later currently about reducing those risks of late payment and encouraging people to buy, or is it actually increasing the basket size? Because I could imagine in the consumer side, someone going in with a basket of maybe £500 and then realizing they can use buy now, pay later, and it can then increase. What stage are we at I suppose, Ed, I'll come to you for that one. What stage are we at with this question? You know, are we seeing it kind of benefit the overall volumes, or more just make payments easier for people?
Both is the short answer. So our merchants are seeing roughly 50% increase. In fact, sorry, 100% increase on their B2B, which is to say that now half of their B2B purchases are coming through us, but of that increase in volume, roughly 50% of that is coming from abandoned baskets. So exactly the thesis that you're laying out there is exactly the one we're solving. Those purchases would otherwise have been lost had the merchant not offered a suitable payment method at checkout. The other half is coming it's a zero-sum game, potentially, but actually not, coming at the expense of cards. But there's a reason why they're choosing us over cards, and the reason is that they're often borrowing more or purchasing more in this case. So exactly those two dynamics are in play. AOVs, average order values, are going up with us, and abandoned baskets are going down. So it really does solve both problems.
Absolutely. And I want to come back to something you've all mentioned, that, you know, having that option at the point of sale, that flexibility, and I guess meeting the customer where they are. You know, when Martin and Jourdain particularly mentioned sort of embedded finance there. And, you know, I obviously, working with MMOB, feel very strongly about that, being able to offer credit to people, you know, that don't have to walk into a bank and ask for it, or they might not realize it, that it was available. And, you know, when Marqeta took a survey around kind of the use of B2B BNPL, one of the main reasons businesses weren't using it was that they didn't think it was for their type of business, or they weren't really aware of it as an option. Was that something that kind of resonated with each of you on the panel? And have you seen kind of more businesses being open to these kind of products as they've been made available through different channels?
I guess for us so in terms of user experience, the one that we are currently offering, for example, with the neobank Conto, is that as an SMB, so I manage my financials, my bank account, etc. on Conto, which is the leading B2B neobank in France. And basically there is this, I would say, a financing tab, which allows you to get access to financial products, and then you have de facto that is listed for account receivable or account payable financing, and then you get, I would say, you can start submitting your receivables or your payables invoices and get financing. I would say in terms of customer profile, so it's really like small companies that are interested by that service, because they are not eligible otherwise, or because I don't know, their eligibility from their bank, etc. takes too long to assess, or maybe there are companies that are too young. Because to get a credit from a bank, you usually need to have like 3 years of activities, etc. So we start seeing in the first days some, like, I would say, auto filtration from potential customers, because they thought they would be too young or too small, etc. to be eligible to, I would say, a financing solution. But it basically takes time to educate your I would say your target audience to this kind of new products, and to make sure that to, I would say, remove the biases that there is minimum X euro of revenues to be done to be eligible. There is minimum you have to be profitable to be eligible, etc. All these constraints that we are removing because we are doing underwriting differently. And on the other side, so that's, I would say, on the people that thought that they will be filtered out. And on the other side, sometimes we manage to deliver, like financing answers so quickly in a matter of seconds, compared to usually like a few months, that people ask, okay, but then what's next? Like, where do I sign, etc. And it's already done. So that's great to see surprise in both ways, like people being happily surprised by the fact that they cannot be eligible, and also happily surprised by how I would say easy and fast it is. And that's definitely, I would say, customer feedback that we are trying to build over time. So that's, but there's still a bit of evangelization to be done, that's for sure.
And Malte, if you were able to, I guess, embed this kind of solution within a platform, we've talked about it being that point of sale with e-commerce. We've talked about the kind of challenger bank that Jordan mentioned. Do you have a dream place where you think this would really work? Is it with an accounting platform? Is it with a challenger bank? Where would you put it? I think he's moving away from being blinded by the sun there. You're just on mute there as well. Does anyone else wants to chip in while that's all going on backstage?
The short answer to that question for me is like, it's not so much what platforms I want to see it in, it's where I want to see it geographically. That's the next big untapped opportunity. It's global trade, B2B trade especially is global, and necessarily companies like ours have had to start in a given geography or a subset of geographies. But the next big step is powering cross-border transactions. Buying a container load of inventory from a supplier you've never met and never will meet in somewhere like Shenzhen in China, where the invoice might come out faxed and potentially illegible, where you have questions around the validity of the counterparty in the transaction. Knowing that person, that entity has been validated because they've been onboarded with a reputable company, that transaction can be funded is going to be the next big step. In terms of platforms right now, I think you can deploy to, and doubtless the other ones really in any available platform, and be transacting within a matter of hours.
Absolutely. Malte, you've bought yourself some time, so what's your answer you're going to come out with now?
No, perfect. No, I mean, as I said earlier, I think the demand for more flexible payment terms, trade credit and alternative forms of financing will increase in this economic environment, and demand from SMEs in particular, right? And I think Buy Now Pay Later will play a pivotal role in improving B2B payments because it enables merchants and marketplaces to offer their buyers, who oftentimes are SMEs, the favorite payment methods and flexible payment terms. And we've discussed this, especially the latter point around lending. And so lending obviously is an important element. But where I would like to see it going more is that lending cannot only be the only element, right? We want to bring B2B payments up to par with B2C, and that means that we need to make it seamless, frictionless, and almost joyful, as we always say. And this means that we will continue to work with our merchants to create really bespoke solutions for their specific context, right? Because that's really what embedded finance is about, is to integrate basically these financial services within the core proposition of the business. And for example, just to give you one example, right? We developed with one of our customers in the car parts industry a solution where their buyers, mostly small to medium workshops, could get a buyer limit. Then they would buy during the month and get a monthly statement after, which they would then settle, right? And this solution drove the merchant's business immensely, right? And yes, the lending element obviously is there and it's important, but ultimately it's the convenience, right, that this drove for the buyers, and that made a big success. So I think Buy Now Pay Later is not only a financing tool, but we see it in the future more and more as a tool to driving customer experience. And this is, I think, the future for B2B Buy Now Pay Later and also embedded finance in general.
Absolutely, it's improved experience for everyone. I guess we have time for I'll just slip one more question in before we round off at the end. I was interested when we talked about using company cards, and I know that an SME will often use their company cards to build out some credit for themselves and things like that. How do we see BNPL contributing to that? I guess when I think of it from the consumer lens, we're waiting on changes of regulation and credit reporting and things like that. How might that work in the SME space? Does anyone have any thoughts?
On the what regarding the corporate cards?
Yeah, so I'm thinking of companies that will use different forms of credit to build up their credit score as a smaller business. Is this something that using BNPL would impact differently?
That's a good question.
Just thought of it.
No, the answer is yes. Again, so the comparable example in B2C land is a young couple that has been regularly paying rent now for the last 10 years, always on time, never late, and the rent represents a significant portion of their income. They then go to the bank and say, present this exemplary repayment history to the bank, and the bank just rejects it out of hand. It's irrelevant to the bank's underwriting assessment because they have no relationship with the landlord. They then say, okay, well, how much are we approved for in terms of a mortgage? And that number ends up being considerably less than they're presently paying happily and always on time in terms of rent. And that just seems objectively unfair. But it is in fact unfair, and a common complaint amongst younger people today, as it should be. Can we help in a structured manner? Sorry, the exact same challenge presents itself when a merchant lends its buyer money in order to effect a purchase. There is no record of that transaction. There's no credit or benefit given to the buyer for on-time repayment because no other credit facility or institution has access to that repayment history. And so indeed, as we grow and as we start to penetrate a broader and deeper swath of the economy, our SME borrowers or buyers especially are going to be able to find that through us we can present their bona fides, we can validate and demonstrate that they are in fact regular repayers and that they are in fact worthy of credit. And so yeah, don't be surprised if you see in the coming years that that credit scoring and in fact associated lending products start to be originated through payment methods like ours.
Yeah, absolutely. I think that could be really beneficial, especially as we say for those small businesses that are trying to establish themselves there. So the final question I have for each of you, I guess, is when we look at Marqeta's survey into businesses that don't yet use BNPL, if they had their cash freed up or they had more flexibility, a lot of them said they would use this to upgrade their technology. So 44% said that, 40% said they'd recruit more staff. 37% just said remain solvent. So that's the kind of place they're in at the moment. I would love to ask each of you just to finish off, if we look to the future and more SMEs begin to benefit from B2B BNPL solutions, what do you think the big benefit will be for them? Will it be their kind of growth? They're able to hire more staff, maybe expand across borders? Georgiana, I'll come to you and first on that one.
So I think that basically what we are solving is that we are allowing we are basically preventing, I would say, SMEs to fail for I would say trivial reasons. One being, I would say, being paid too late by your large customers or suffering working capital issues up to insolvency or being ineligible for weird reasons from your banks, or just like waiting the money from your I would say last loan that never arrives, etc. So when in the context where we offer instant financing solutions for, I would say, day-to-day purchases, either receivables or COGS or marketing, etc. We are basically, I would say, allowing SMEs to have more peace of mind and to reallocate their resources not on the optimization of the piloting of their treasury, nor on the I would say administration side, but really like allowing them both SMEs, merchants, marketplaces, etc. to refocus on their core businesses, which is, I would say, developing and selling value. So if freed from all these constraints, SMEs are thinking that the best way for them to deliver more value is to hire more staff or buy more inventory or making investments to increase productivity. These are all, I would say, opportunities of projects or of new investments that as I would say short-term lenders that we allow these guys to achieve.
Excellent. Malte, how about you? What would you like to see?
I'll make it short. A lot of the things that Jordan, mentioned resonate with me because, the purpose of our company is to simplify the financial lives of SMBs so that they can focus on business. And I think it's basically that, right? We want to just take the burden off them because they don't have to be, they typically aren't, pros in finances and treasury and all of that stuff. And we just want to take that burden off them so that they can focus on their business and, take the right decision. If it frees up resources for them, all the better. And but if it's just peace of mind and focus on their business, then also great.
Exactly, enabling them to do what they do best. Ed, I'm going to give you the final word on this. What's something you think you would like to see for SMEs in the future?
So one of our merchants, using the money that they were able to unlock, that was at that time tied up in working capital, by working with us, was able to hire 70 employees off the back of that freed up capital. This is a huge benefit, not just for those, that merchant and indeed for those employees, but for the whole entire economy. If you sum up all the money that is presently tied up in working capital, which is to say, effectively loans by merchants to their buyers, just to allow them to carry on their commercial activities, put that all into one huge pot, what you would have, doesn't matter what country you're in, is the largest bank in that country, hands down, bigger than any other commercial bank. That money is presently tied up, not earning any interest, often being paid late, and tying up administrative burden on behalf of merchants and buyers in a way that's just a huge handbrake on the economy, especially for the smaller companies. And so freeing that up, this is the final frontier really of commercial credit. Freeing that up is going to have an enormous impact on the economy, and all for the better. So I'm hugely excited for the next few years.
Absolutely, very exciting. Well, I'm afraid that's all we've got time for. I could go on about those concrete examples of fintech helping SMEs and creating jobs all day, but I know we've all got places to be. So I'm going to round off, but I really, really appreciate your time. I want to say a massive thank you to Jordan from Defacto, to Malte from Mondu, and to Ed from Two, and also to Marqeta for inviting us all on. So thank you very much, and thanks everyone for listening. Have a great day.
Thank you.
Thank you.
Bye.